higher high or lower low in relationship to equal highs or relative equal highs and equal lows. When you're using it for a framework for looking for a low resistance liquidity run and trying to trade to a point above equal highs when you're bullish or below equal lows when you're bearish, you have to consider what those highs look like, because it's better, okay? It's better when you create a high and it has the higher high on the right. They tend to be stronger, especially when you're bearish. Why? Because it's showing it's rating and rejecting the previous high. So when anyone that was short here and it runs it above that, they're no longer allowed to be short, but that buy stop they used is now counterparty to smart money adding more shorts, and then you get this quick move lower. So if you look at it on a 15-minute chart and an hourly chart over a span of a 4-week time, you will see lots of low resistance liquidity runs, and they'll also create this signature a lot of times when there's a fair value gap, when it has a higher high, that creates a scalp. And since you're looking at a 15-minute chart, that may require a patience factor that maybe you weren't expecting yourself to require in that setup. Maybe you were expecting it to go right on through that. Not if it has these elements. Okay, so it's really, really important you understand that. And now I'm going to go over to the E-mini S&P. All right, so here's the E-mini S&P, and I'll work backwards in this chart because I wanted to use this chart to segue into, because it's along the same lines as I was mentioning with the relative equal highs. So on the 15-minute chart, you can see we have this high and this high here. So on an hourly chart, it's going to look basically like what I just showed you on the Aussie dollar. So, but it's this high and this high here. And then we have this movement lower. What is happening right in here? It's the same thing I just showed you with Australian dollar. So we have relative equal highs in here. This high being lower than this one. Did this run above these relative equal highs move a lot? No, it didn't. And price does what? It breaks down and it leaves a fair value gap. So now we have relative equal highs between this high and this high here. So any buy that you pick up down here on an order block that you'll see when we go to an hourly chart, and it starts rallying up, it looks like on Friday that this relative equal highs would be ran out. Look closer. We have a fair value gap in here. Price trades up into that, and today at the open on Sunday, we are down here. It's softer. Now, that's not to say that we won't go higher, and that's my expectation. I would rather see the S&P trade above. I think this is just a knee-jerk reaction to all of the protests that's going on around the U.S. But I believe, as I'll show you here, there's some things still in the chart that would need to be completely erased before bearishness comes in, because I think they're still trying to press it deeper into a premium. But you can see the effects happening even in the S&P here. Okay, so in an ideal world, we want to see relative equal highs that we're looking to run when we're bullish for a low resistance liquidity run. I know that's a mouthful, but we want to see a lower high there on the right. It makes it a little bit easier to get through. If you look at this high here to this high here, we traded down, yes, but then look what we did. We traded right on through it, easy. Relative equal highs, lower to the right, went through it, relatively easy. Same thing here, lower high, relatively easy. What do we have here? Lower high to the right. So this retracement may just be what needs to happen for picking up more orders inside the order flow in here, and then ramming this thing higher. If we bring in the other indices, the red is the Dow and the blue is the NASDAQ index futures. Okay, so on the 27th, you can see that the NASDAQ made lower lows, the S&P made lower lows, but the Dow was saying, no, I don't think so. It diverged. So that's your index SMT divergence. And it creates, when it trades down to a bullish order block, as we'll see when we go back out to the E-mini S&P chart, it shows the underlying accumulation that's taking place here. So all of this running down is a run below these equal lows. This is how I like to use the relationship between the Dow, the NASDAQ, and the S&P. So if I have equal lows that I think are suspect, in other words, they're likely to run those out. If it runs those lows, I want to see if it's a fake run lower to pick up more orders to go higher, which is what I would see that as, because we were expecting the S&P to go higher if we traded above the volume imbalance, which is that blue shaded area down here. As I said, I'll work out to a higher time frame daily chart and flesh all this out. But I want to show you how when I look at charts for index futures, okay, the way I see setups that happen every single week like this. These are just easy bread and butter setups that they're always in the charts. They're always every single week there. That's why I said, like, you're learning this because it will give you the same ease at your heart to know that even if Forex was denied, say something happens, there's a global reset. Okay, we're going to take an extreme leap into the tinfoil hat bin, and say that there's a global reset. The dollar collapses, all of foreign currencies collapse, and they create a one world currency, and it's a cryptocurrency. I'll even go so far as to say that. I'm not believing it. I'm not saying that. I'm just putting that out there as a hypothetical, just to make an extreme argument. Even if that's the case and that happens, okay, great. I'm going to go back to trading index futures. It's no big deal to me. I don't have to be a Forex trader. I don't have to be trading the things that other people are doing, because everything I'm teaching you, it gives you freedom. It does not limit you. You are learning price action to the highest degree that will allow you to go into any asset class and say, I'm going to carve my career out here and not be dependent on a job. Right now, look around, folks. Really take a step back and just take it all in. We have seen so many things come out this year. Okay? We had a pandemic, a killer virus that didn't really kill that many people. We shut down economies. We shut down businesses that are probably never going to come back. We locked people in their home, lowered their immune system, killed the economy. Now it has this war between people that wear masks and believe everyone else should have a mask on, and those that don't want to wear a mask and think that people wearing masks are nuts. So you have division there. And it didn't create enough civil unrest. So what do? They go right back to the race baiting again. And I'm not trying to diminish anyone's life being taken away, but everyone's falling for the trap. And it's always division. Because they saw everyone rising up again in China. So what do they got to do? Create another distraction. They record a cop that makes no attempt to hide what he's doing, and it is recorded. Any other time a cop saying, "Get that camera off me," nope. The Asian police officer was right there making sure he was out of the way so the camera shot could be taken. It was all meant to incite everything that's going on right now. This entire world heard our military confirm the existence of unidentified flying objects. Now, I'm not saying ET exists, but they're saying that they've seen an encounter video documentation of things that move faster than them, and they don't know what it is. They released that to the public. Any other time, the public would have been going nuts. But because everything else that's going on, they dropped it in there, say, well, we told you they existed. So later on, if something happens, they're off the hook. Hey, we told you it existed. But everything that's going on, okay, everything that's going on this year has been a whirlwind of confusion, fear, uncertainty, loss. People have lost their jobs. I have people in this mentorship that are paying out of their savings because they know what they're learning here is going to provide a inflation proof, a pandemic proof form of feeding themselves and their family. So when you learn about index futures here, and you signed up with, because I'm supposed to be the Forex guru, I'm not the Forex guru. I'm the price action dynamo. I'm the guy that knows how to go into any of these asset classes and find the opportunities. And that's what this mentorship is. It's teaching you those skill sets. So when you see this SMT divergence on the index futures like this, know and trust that it happens every single week. And you can get your one shot, one kill, your 1 pound of flesh trading index futures. You don't need to trade a lot of different things. Just one little thing that lines up with what I'm showing you here, if it looks like this, then it's probably a signal. It's probably a setup. Okay. But what I'm looking for is the standard things that you've seen me teach you in Forex. I'm looking for a run into liquidity. If I'm bullish, I want to see equal lows be purged. And then some kind of supportive evidence. So what would that be in Forex? If it's trading down for the British pound below relative equal lows and I'm bullish, how do I know that it's not going to continue going down, Michael? Well, I'm looking at the dollar index to see if there's an SMT divergence between the USDX and the currency I'm looking to trade, or if there's a correlated pair SMT divergence between cable and euro. So euro should have made a lower low, whereas cable made the higher low, but still below its relative equal lows. In other words, looking at this E-mini S&P here, say this was the British pound, okay? And once we go below these relative equal lows here, if it trade down into a bullish order block, then I would expect to see a failed higher high in relative terms here on the dollar index, or this low being higher or different. Let's say it that way. The euro dollar may have not made a lower low, and that confirms it was just simply a run below equal lows to get the liquidity, and then it's going to move up. And in the euro, that might change my mind. If we created a higher low in euro than we do here, even though this is a setup buying a sell side liquidity pool and then trading at higher relative to a weaker dollar, I may change my mind and say, okay, even though I was stalking cable, the price structure that's in euro dollar may change my mind about trading long euro